up? What's up? What's up? Hey, how you doing, Tanika? All right. There's a solar eclipse today, so in honor of the eclipse, I have this fancy orange lighting going on behind me. So I'm gonna make this pretty quick because I'm pretty sure that the viewership is gonna be low today in honor of the eclipse. So I did promise you guys Ask the Trader, so I will be doing it every Monday at 1 o'clock, at least for the next, I think, 8 or 9 more weeks. So this weekend I was in Detroit, and I went to a Limitless class held by Noble Woods. So I want to congratulate him for having such a great turnout. He signed up a lot of people into his Limitless class, and I just want to congratulate that brother for putting together a great program and a great educational class for you guys, especially if you're trying to get involved in buying and selling stock in the Millionaire Challenge. So let's get to some of the questions that came in this weekend. No problem, man. If you have any questions, start now, because I'm going to try to get out of here in about the next 10 minutes. All right, this morning I dropped another video. Every Monday I'm going to drop an educational video. It's just going to give you a brief look at, how to do certain things in the market. Again, if you need to educate yourself, please do it through Limitless class. But I dropped a video and a lot of questions came in because a lot of us don't know how to buy and sell a stock on a brokerage platform. So once you accumulate your funds, and once you open up your brokerage account, and then you transfer your money into that brokerage account, now you get to buy and sell stock. But most of you guys don't know exactly how to do it. So you definitely want to check out that video. I was on the Scottrade platform, and I kind of explained the difference between a regular order and a limit order. And I'll also talk a little bit about market orders. So once you look at that particular video, you're going to hear me talk about limit orders. What's a limit order? A limit order, let's say we're buying a stock and we want the prices to go up, all right? And you're trying to figure out how to get into the stock. Let's say you're looking at Apple, and Apple is fluctuating between 150 and 145, and you want to get in at the 145 level. And you don't have time to look at your computer. What you want to do is you want to place a limit order. A limit order means the price that you put or better. So if you put in 145 as your buying price, you can place that order on the platform, and the limit order is going to allow you to buy the stock at 145 or better. Okay? Looks like there's a lag, so I'm going to try to take this off. All right. All right, so again, limit order. Limit order is that price or better. Whatever platform that you guys decide to trade on, all the platforms are going to look about the same. They all should have limit orders on there. You want to get familiar with placing limit orders when you're buying stock. Okay, so a limit order, again, is buying at that particular price or better. You can place orders. You don't have to necessarily be watching the market that day. You can place the order, and then 3 or 4 months from now, if we ever get down to that price, your brokerage will buy that stock for you, depending on how many shares you put up and if you have enough money in your account to buy it. So another question came in that said, what is a market order? I don't want any of you guys to place market orders. Market order is basically if you want to get into a stock immediately and you don't care what the price is at that particular time, you just hit market and it will put you into that stock immediately. It might not be the best price, but it will be near that price. So I mean, if you see the stock fluctuating between 145 and 146, a limit order will put you in at 145. If you place that order, a market order might give you 50 extra cents, you know. So you want to play around with that too. You could play around with it on paper, on your virtual paper money account. Some other questions that came in this weekend. I don't see any questions, but that's cool. Another question that came in was, oh, I didn't answer what a pullback was or a sell-off. So every August or September, I look for the market to sell off. Now, I look at indexes. What are indexes? Indexes are like the Dow Industrial Average, okay, the S&P 500, the NASDAQ. You guys want to get familiar with looking at those indexes, because those indexes is what advanced traders look to kind of get a pulse of what the market is doing at that particular time. If I hear that the Dow was down, you know, 100 or 200 points, I immediately know that the market was probably down 0.5% to 1%, which will probably mean that my long-term account is probably down that day. So you want to get into the habit of, even if you're not checking your portfolio, just check the indexes. Just look at your Yahoo Finance app. Look at where the Dow is. Is the Dow up heavily today? Is the Dow down heavily today? And you'll start getting an idea of how much, because some of you guys hear that the market sold off, but you don't know exactly how much that is. You know, 1% is normal. You hear that the market is selling off 1%. That's a pretty big deal. The market probably fluctuates between, you know, 0.25% to 0.5% every day. Usually you'll see one day during the week where it's 1%. If you see the market sell off more than 1%, it's a big thing. When the market is going up in value, most investors that are short-term trading or trying to get into a stock, they're looking for 5% pullbacks on the indexes. What's a 5% pullback? Well, if you go to a high and you calculate 5% from that value lower, once that index drops to that value, then they know, okay, this is about that time to maybe buy some stock. All right, so let's say I wanted to buy Apple or something that's in the tech sector, and I wanted to buy Apple or Amazon or eBay or Microsoft, and I want to just get in, but I don't want to get in at the highs. Well, what I'll do is I'll wait for the NASDAQ to pull back 5%, and then I will look and see where my stock is at that time. I will also want to see the stock that I'm interested in pull back 5 or 10% before I get in, because I hate buying at the highs. But most of us are never going to catch the low. But stocks move in a stair-step up. All right, so as it goes up, I want to get in when it pulls back a little bit. And then when it goes up again, I don't want to buy here. I want to buy here where it pulls back. So a pullback is just a minor sell-off continuing in the same direction. Okay? So that's what a pullback is. And a sell-off is when the market sells off. Okay? 5% is usually where investors like to get in. 10% sell-off on the indexes. You're going to hear the pundits say that we're about to approach a bear market. We start hitting 20%, you're going to hear everybody panicking. 10 and 15% is where I really, really like to buy stock, because the trend has been going straight up since 2008, and I'm going to stay with the trend until it ends. You know, the trend is your friend. Always remember that in stock. The trend is always your friend. You always stay with the trend until it turns. Most of us think that we can time it and know exactly when the market turns. I'm not a big believer in that. I've been in the market for so long. I set my ego to the side and I said, you know what? I'll let the market tell me when I should be long and when I should be short. Right now, the market is saying stay long until we get a 10, 15, maybe even a 20% pullback, and we start having lower highs. Lower highs mean if this is the high and we drop back, and then we have a lower high, and then we drop back, and then we have a lower high, that's when the trend starts to go down. But we've been having higher highs. So the market has been stair-stepping up. So you stay with the trend. I don't care what anybody is saying. Right now you stay with the trend until the trend changes. Whether it's short-term, long-term, you stick with the trend. I would say maybe short term, which is a couple of days, we've been selling off. So, you know, the bears have been happy since about Tuesday or Wednesday of last week. But we haven't sold off to the point where I'm panicking. I am 30% cash right now, meaning that 70% of all the money that I have is invested. But I have 30% that's sitting back, waiting for a 5 or a 10% pullback so that I can buy stock at a lower price. So it's a win-win for me, because although I'm not capturing all 100% in a move, as long as I have something in the move as it's going up, I'm still profiting. And then that 30% is what I'll use on a day where the market might sell off, you know, 5%, or a month where it might sell off 5 or 10%. Now I have the funds to buy more stock at a lower price, or stock that I've been watching. Like I picked up some Snapchat last week and I loved it because while everybody's hating it and throwing it up, it's a great time to buy for me. I got in at the IPO price, and then I got out, and then I waited for it to sell off because the trend of Snapchat was down. So I got out. The trend looks like it's changing. I'm not 100% sure, but as an investor, I love to buy at the bottom. And as we start to stair step back up, you know, I start adding to my position. So I don't see too many questions coming in. I think I answered most of the questions that came in this weekend. I want you guys to go out there. I got my solar glasses that I can't see through at all. I don't know if they're going to work or not. And I think the eclipse is coming probably in about an hour. So hopefully you guys keep your eyes safe. And coming from you from Decatur, educate yourself, get money, open up those brokerage accounts, and I am out. Peace.